What's up, everybody? Thanks for joining me for episode 8 of my channel. Welcome back to Finance Friday. You're here with Finance CJ, and today I thought we'd kick off the new year a little different. I'm starting a new series called Why Pick a Winner. Now, the whole thing behind this series is that you can invest in several companies and still get the benefit of the overall sector. Today we're going to talk about a payment sector. Now, you may be thinking what consists of the payment sector, and I'm going to talk about why the payment sector is very important, why it's such a high growth industry, and what companies you should put on your radar this year. Now, the payment sector is a simple thing that people overlook, and the major names we're going to talk about are Visa, MasterCard, Square, and PayPal. There are a few others in the sector, but the main reason we talk about these is they deal mostly in the payment department. They don't deal with banks, they don't deal with lending, they don't deal with the credit cards. Sure, they have that aspect of their business, but that is not their primary revenue. Now, the reason we're talking about these is they are high margin businesses. And we're going to talk about a few key metrics that I like to look at when I'm looking at stocks, especially in a growth field rather than a value play like a dividend stock. These things are going to be net revenue, operating margins, net income, and free cash flow. We're going to talk about each company's year-over-year quarter 3 growth or decline, and we're going to talk about why the numbers look how they do. And I'm going to try and break it up into similar fields, as in Visa and MasterCard are going to go together, and PayPal and Square are going to go together. Now, before we get into the comparison between Visa and MasterCard, we're going to talk about what the 4 metrics I listed actually mean. Net revenue is how much the company makes in total. Net income is how much the company takes in after it pays all of its expenses. Operating margin or return on sales is the operating income divided by the revenue. This is going to come out to a percentage, and we're going to talk about how the higher the percentage is, the better. In simpler terms, it's how much money the company gets back for every dollar it spends. So if it has a 70% operating margin, for every dollar it spends, it's getting 70% back. Finally, the last stat is one that is overlooked in the mainstream, as in, like, if you Google a stock, it'll give you the PE ratio, it'll give you the 52-week high and low, but that statistic is free cash flow. Free cash flow is simply how much money the company has on hand. Now that I talked about the key points we're going to talk about in this video, let's talk about how they apply to Visa and MasterCard. Now, I have the year-over-year numbers written out, so I'm going to be holding my script up to just get you the numbers accurately, and then we'll talk about it, okay? So, here we go. Visa's quarter 3 of 2020 showed a net revenue of $4.8 billion, a net income of $2.46 billion, an operating margin of 64.5%, and they have a total free cash flow of about 26.1. They had a net revenue of $5.8 billion, a net income of $3.16 billion, and an operating margin of 65.3%. MasterCard, on the other hand, had 2020 Q3 numbers of a net revenue of $3.8 billion, a net income of $1.5 billion, and an operating margin of 54.9%. In 2019 of Q3, it had a net revenue of $4.5 billion, a net income of $2.8 billion, an operating margin of 59.4%, and in total they have a total free cash flow of about $16.4 billion. Now, you may be thinking, right off the bat, it sounds like the numbers are declining. And if you looked at the year-over-year numbers, they would show a decline, because Visa made $5.8 billion in Q3 of 2019 and only $4.8 billion of 2020. Now, you may be thinking that, why am I talking about declining businesses? And like I said, Visa had a $5.8 to $4.8 billion drop-off year-over-year in net revenue. The reason this is happening is still because of coronavirus. With coronavirus imposing stricter lockdowns in places like Europe, people are simply not having to make orders or use the payment sectors. Like I said, one of the most important things is how much free cash flow these companies have on hand. And as you heard, both companies have over $10 billion of free cash flow on hand, meaning they could make almost any acquisition they wanted in the payment sector. Also, They could continue to pay their dividends, they could do share buybacks, and that can drive up the stock price and make it better for you. The reason I talk about these companies is not only are they growth companies, but they have been growing their dividends as well. They have been growing their dividends over the past 5 years at a rate of almost 20%, both companies. This is why I talk about owning a basket of stocks rather than picking a winner. Both companies are performing extremely well, and you do not need to get behind just one company. You can own both in your stock portfolio. The reason the payment sector is a good one to get into is because they are a higher margin business. Now, this means that since they don't have to produce a good to sell to people, and they are simply making money off of every time you swipe your card because the business is paying a fee to MasterCard and Visa every time the card is swiped, they are able to operate at a higher margin. That means they're getting more return on their money every time that a payment occurs. And to build off this, just think about, do you think in the next 5 or 10 years that more or less people are going to be using a credit card or a debit card? If you're like me, I think we will be using our credit cards and debit cards more often than not, especially when it comes to more advanced payments such as on your phone, and you can just put your phone to the reader and you're paying your bill. Now, before we go any further, I just want to remind everyone that I am not a licensed professional, I am not a financial advisor, and this is not formal financial advice. I encourage you to do your own research, and I only talked about a few key statistics that I look at, and there are many more that you should be looking into if you really want to add Visa or MasterCard into your portfolio. Everything I've listed above are key examples of why you should want these companies in your portfolio. Now, if you like to look at PE ratio, Visa is a little cheaper in terms of PE than MasterCard. Visa also has a higher market cap. As I said, both of these are solid investments and would be a great addition to anyone's portfolio. The next set of stocks is PayPal and Square. Now, these are a little smaller than Visa and MasterCard in terms of market cap, and they do a little bit different things, but they are still solid payment companies to take a look at for your portfolio. Now, to start with PayPal, PayPal really made its name with eBay as the exclusive provider of payments for transactions over eBay. It eventually branched out from eBay and reached out to more retailers and started allowing the pay through PayPal function when you check out. You can see it in a lot of different ways when you're shopping online. You can check out through PayPal rather than entering all your information in, such as your credit card and address and all that. After branching out, they sought to reach the younger generation as well, so they weren't just sticking with an older generation. They also own Venmo, which a lot of younger Generation Z and millennials tend to use for different types of transactions, such as sending money between friends and making it easier to pay a bill when you're out in a group at a restaurant. And again, PayPal makes money the same way Visa and MasterCard make money, as in charging little fees for using the accounts, such as PayPal and Venmo. So every time you receive money, you have to pay a little fee on that money. Square is a similar concept. Now, Square has some hardware components which you may see at some small businesses to make it a little easier for small businesses to accept credit cards and debit cards. They also have a separate app to reach the younger generation as well. You may have heard of Cash App, which has the same concept of Venmo, where you can send your friends money over Cash App, and on top of that, Cash App receives a fee on money taken out from Cash App. As I did before, I'm going to talk about those 4 key metrics for both Square and PayPal for 2020 and 2019. So let's get the paper and let's go through the numbers together. So for 2020 for PayPal, we're going to talk about the bigger market cap business first. PayPal in 2020 Q3 had a net revenue of $5.46 billion, a net income of $1.026 billion, and an operating margin of 27.2%. You'll notice that this is much lower than Visa and MasterCard. It's a younger company than both of those, and it's still learning how to grow that operating margin, as I'll point out in a second. In 2019 Q3, the net revenue was $4.38 billion. PayPal made $460 million, and their operating margin was 14.8%. So year over year, they raised their operating margin about 13%. Total free cash flow for PayPal sits about $4.1 billion. Square, on the other hand, is a little different story. In 2020 Q3, Square had a net revenue of $3.03 billion, a net income of negative $37 million, an operating margin of negative 0.61%. In 2019 Q3, Square had a net revenue of $1.27 billion. They had a net loss of negative $29 million, an operating margin of negative 0.14%, and their total free cash flow sits about $174 million. Now, you may be thinking, why am I talking about Square when it is not profitable business? But we see how Visa, MasterCard, and PayPal are. Now, a lot of people in the market think that Square could fit into those stock sectors. Now, if you're like me and you believe in Square, then you could understand why we're investing in a company that's not yet profitable. And it could be that Square doesn't want to be profitable yet. They're still in that high growth market. One key factor for Square, and this is one thing that I look at, is a management team. CEO Jack Dorsey, also the CEO of Twitter, knows how to run a company. He knows how to delegate what he doesn't know to other people and let people who are smarter than him handle things that he does not understand. PayPal, on the other hand, is increasing that operating margin, which is a major factor for creating more free cash flow to allow more money to go to shareholders and more money to go to stock buybacks and growth for the company that can increase the share price. Both of these stocks had a very big run-up this year, and maybe they are a little overvalued, and that's what you're going to get in the high-growth market, but they are solid companies, and that is why we put them in this payment basket. I believe that Square will turn around and become profitable over the next 5 years, and I believe they will continue to grow at a rapid rate over the next 5 years. And I believe that we will see these companies have more of the financials to reflect what Visa and MasterCard are showing. Once they understand how to operate, they can bring down their operating expenses. The most important thing I want you to take away for this video is the fact that I made a series called Why Pick a Winner. Most people think that they need to find the next Tesla or they need to find the next Amazon to have a great stock pick, when in reality you can look at a sector like the payment sector and you can develop a basket rather than pick an outright winner. And I think there is enough market space for each of them to succeed in the coming future. As always, don't forget to like, comment, subscribe, and hit the notification bell if you want to know when my videos are posted. Definitely let me know if you like this basket series that I'm going to be doing for a little while. And if you don't let me know as well, then I'll cut the series short. I do have a couple episodes planned out, but I want to make sure that you guys, as my audience, like what I'm putting out, and I want to make sure you're enjoying the content you're seeing on this channel. Don't forget to check back every Friday at 5 p.m. I post my videos, and you'll be here to celebrate Finance Friday with me. I set them up as a premiere so you can watch them with me and live chat with me. And if you have any ideas for stocks you want to hear me talk about, let me know. Until next time, good night, guys.